Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies video for the week beginning April 19th. I do these relatively short videos once a week for Twitter and YouTube followers. And if you like what you learn, check out our DT reports, or check out, if you want really trade strategies from entry to exit, very comprehensive trade plan, check out my book, High Probability Trading Strategies. Before we get started, we're going to look at the same two markets, the ES and the Euro, that we looked at last week. And I'm going to emphasize trade strategies this week. So remember, you want to learn to trade, not forecast. Identify technical conditions with a high probability outcome and a specific low-risk trade strategies to take advantage of those conditions. So that's what we're going to be talking about today with the ES and the Euro, both what happened last week as well as potential setups for this coming week. So let's begin with the ES. So this is the ES daily data. I'm going to put my cursor on a week ago Friday, that Friday, April 9th. And so I did that weekend, did the video, and you can go back and look at it, but just as a condensed version is we're looking at the ES was at or near what we call at least a daily high and a potential for a weekly high. So we're looking for a probable top coming up very soon. Again, this is a week ago as of April 9th, and at least a 4, 5, or 6 day corrective decline. And with the potential, and one of the reasons to focus on it is a weekly high, because the weekly momentums, the weekly position was also in a position to make a weekly high, at least potential. So anytime we have the smaller time frame reversal, in this case a daily high, what we call a daily high, that makes it in a position to be also a weekly high. That's why we want to focus on it. So a lot of the stuff I had on the chart last week I don't have on the chart now, but let's just take a look at this past week. Here was Wednesday. Wednesday we made what's called a 3-close bear reversal. And that's where we made a slight new high during the day, and then the close was below the closes of the prior 3 days. That's usually a pretty strong reversal signal, particularly when the daily momentums have been overbought for several days, and we were making a bear reversal on that day. We might have even had made it the day before. That was a great setup to go short on the close. That's a recommendation we had for our subscribers. With a stop, where would the stop be? Well, no more than a tick above the high made prior to entry, because it's either a reversal day or it's not. And so if we or the ES ended up continuing to advance above Wednesday's high, it would void that as a reversal signal and a reversal day. So I took a small loss on that, very small loss. The following day, because the following day, of course, on Thursday was a strong up day. So whether you're shorting the SPY, doing a bear ETF, or even a leveraged position like futures, got stopped out the following day, small loss. So has anything changed in our trade strategies? Well, nothing's changed with the technical position. That means we're near an extreme to which we should be making, and probably not just a daily high, but a weekly high, because now we're the second or third week of the weekly momentums being overbought. And as of this past week, the 13 look back fast lines overbought, and that's what we call dual time frame overbought position. So we're in a stronger position to complete a weekly high. So we continue to look for go short strategies on reversal signatures as long as this daily momentum is bearish. It's still bearish and it's not oversold. So as long as that's bearish, if we make a reversal signature, not necessarily just a lower daily close, but we have several kind of reversal signatures that we teach and describe in our regular reports. You may have different ones, but what you want to be aware of, we're near that extreme to complete at least a daily high, if not a weekly high. And in fact, this past Friday was a pretty important time factor that again indicates we're near an extreme to make a reversal, and that is the low to to high. In other words, the advance off the March 25th low has taken up as much time as this whole cycle from low to low. That's a pretty significant time factor that we're near that extreme to make that high. So what we're going to be looking at early next week is another reversal signature that will then put us in a position to identify specific go short trade strategies for at least a daily high. Daily high, we mean a corrective decline lasting at least 4 to 5, 6 days, something similar to what we had back here. That was a 5 trading day decline. That's called a daily trend. And with the potential, though, for being a weekly high, because all the weekly targets have been met, and the weekly momentums are in their second or third week of overbought and reached dual time frame overbought last week. That's what we're looking for with the ES for the coming week. That's what we're looking for in the trade strategies of the past week. Again, it was a loss. It was a very small loss, what we call manageable loss. You got to count on about 50% of your trades are going to be losses. That's why you got to keep the losses quite small relative to, ideally anyway, that's the only way you're going to make money if the gains are quite a bit, the average gains quite a bit more than your average loss. So that's why trade strategies are so important. Let's take a look at the euro. Before we take a look at the euro, this is from the World Cup Championships.com. It's from their webpage. And this is my trading results so far this year in this Forex trading contest. I'm up 175%. This, by the way, it's real money, real trading. It just shows that everything I'm teaching you is for real world trading, making real world trade decisions. And whether it's Forex or whether it's the futures or whether it's stock indexes or stocks themselves, the trading strategies I teach in these videos, it's the same for any actively traded market in any time frame. It's all just bars on the chart, and it's all the same analysis and trade strategies. So let's take a look at the euro. This is the Euro Daily. I'm going to put my cursor as of the end of the prior week. That's my cursor's on Friday the 9th. So the video I did a week ago, and you can review it if you like. It's up here on this channel as well, as we're looking for a probable daily high, and that we're in a position to have completed a daily high. I won't go over all the technicals at the time, but it included the daily momentums where dual look back overbought. We had some price relationships and more. So we were in a position to develop a go short trade strategy. What happened the next few days, Monday was just a little inside day, up slightly, and then Tuesday, big strong update. So we had to revise a little bit the position of the market, but nothing had changed in that we're looking for a daily high. We just want to look for specific resolution of the immediate advance. Well, and right above the market was a real key price resistance area, which would probably result in at least a high lasting several days, followed by a corrective decline. So this is a probable 5-wave advance. And what's all these lines about? Well, number one is the 100% alternate price projection of this past advance. And it was also this swing low, the close as well as the intraday swing low. Old support frequently becomes resistance. Also on the chart, it was right around where this double top was on this corrective. So there's obviously selling came into the market here, and potential for selling coming into the market again, particularly when our momentums are dual look back over bought for several days. And then it was also the 50% retracement from the February 25th high. So a lot of significant charts resistance, price resistance right above where we were the prior week and where we came up to and really stopped for 3 days, Wednesday, Thursday, and Friday. So we're probably Again, not probably, we are in a position to complete a daily high. Keep in mind that what we call a daily high would be followed by a 3 to 5 day corrective decline, probably about a 50% retracement within what is a higher time frame bull trend, a weekly bull trend. So let's take a look at the intraday data. Do we have a sell signal here yet? And if not, what would be a specific setup for early next week? Well, here's the data. I'm going to reduce it to Thursday afternoon because we were straight up. This would be Tuesday, I think, and then another up day Wednesday. Now, Thursday, by the end of the day, we had made, or we were in a position to have a lower daily close. Now, that's a lower daily close based on the close of active trading on the East Coast of the United States. Of course, the Forex is 24-hour trading. There isn't really a daily close, but the active trading ends at that point in time. So we use those for our reversal days and such. Well, there were two reasons not to go short on the lower close on Thursday. Number one, we hadn't taken out this little swing low, and that would be a pattern reversal signal that the short-term advance was complete, which would indicate the higher time frame daily advance was complete. Also, we'd made this advance early in the week, and then a really well-defined correction. I got labeled a 1-2, and then this impulse trend up. We really hadn't made the 4 and what we consider a 4 and a 5 in Elliott wave terms. So it wasn't set up to go short, particularly because we also hadn't taken out that swing low. I'm going to add the data for Friday. Overnight, I think we tested the swing low to the tick. Of course, overnight, I'm certainly not up this low volume overnight trading, and I hope you guys aren't either. But anyway, the trading starts getting active from East Coast time very early, 3 or 4 o'clock. Around then, and then it's pretty actively traded until the U.S. about 2 or 3 o'clock. So this is Friday's data, and of course Friday we didn't come down and take out this swing low. So here's my specific trade strategy. We're still in a position to complete at least a daily high. That would be followed by a 3 to 5 day correction. A great short-term short trade. So I'm continuing to look for a setup to go short probably for a few days, and what I've done is this low that was made overnight Thursday to Friday, I've made this a price alert. If we take that out on Monday, I will then develop that by the way is called a pattern reversal signal. I will then develop a specific go short trade strategy, not necessarily go short taking out the swing low, but I will have my alert set. If it takes it out, depending on what it's done prior to taking out that low, I will then, though, develop a specific go short strategy for a probable corrective decline of several days. Let's get my other daily chart here. And probably about a 50% retracement from the March 31st low. And if we happen to go higher on Monday, so I don't know what's going to happen, but I set contingencies for if it does this, then I do this. If it does that, I'll do that. So if it happens to go higher on Monday, the upside is probably going to be limited to around the 127, 162% external retracement of this decline. That would be the end of wave 5 target zone. If we get up into this area without having taken out this low, I will then look to develop a specific go short strategy, knowing that we're probably near the extreme in price before we complete that daily high. So again, this decline should be a corrective decline lasting 3 to 5 days. Again, I get the right daily chart here. About a 50% retracement, and the reason that it's probably just a corrective decline, not the beginning of a bull trend, because we've probably just begun what we call a weekly bull trend, of which we probably have another 2 to 3 weeks net sideways to up before we complete. So any decline should be a correction within a weekly bull trend. Well, that's what I'm looking for early this coming week, both for the ES and the other stock indexes, as well as the euro. So I hope you learned something. Remember, trading is about trade strategies and identifying conditions with a high probability outcome and acceptable capital exposure. It's not about forecasting the future. Robert Miner, over and out.